The digital asset created by Ripple XRP has been formally recognized as a Tier 1 global reserve asset according to a confidential World Bank report that was leaked. This is a revolutionary development that has the potential to completely alter the fundamental underpinnings of global finance. With this historic announcement, XRP joins the elite group of conventional reserve assets like gold and sovereign debt. This has enormous ramifications for the global financial system as a whole, as well as the cryptocurrency market. This document states that central banks worldwide are required to include XRP in their reserve holdings under the new Basel IV standard. With an internal valuation benchmark set at an astounding $500,000 per coin, this effectively institutionalizes XRP on a scale never seen in cryptocurrency history. We must first grasp what it means to be a Tier 1 global reserve asset in order to comprehend the seriousness of this development. Reserve assets have traditionally only included highly liquid government bonds from stable economies or physical commodities like gold. These assets are the foundation of global monetary stability because they give central banks the security and liquidity they need to support their currencies and keep their economies stable. By placing XRP in this exclusive group, the World Bank is indicating that digital assets are no longer considered fringe technologies or speculative tools. They are now acknowledged as crucial foundational elements of the global financial system. In order to strengthen the financial system against future crises, Basel IV, the most recent version of international banking regulations, sets stricter capital adequacy criteria and liquidity limits. The mandate that central banks diversify their reserves to include digital assets like XRP is one of its most revolutionary elements. Because of this law, no central bank that wishes to adhere to international norms can afford to overlook XRP. The actual result is the development of a massive institutional demand for XRP that surpasses the sum of all prior retail and speculative interest. What is the specific meaning of this? Imagine that all central banks, including the Bank of Japan, the People's Bank of China, the European Central Bank, the US Federal Reserve, and countless more were compelled by law to buy and retain XRP. This requires constant, consistent accumulation, which will put a lot of upward pressure on the price of the few XRP tokens available. Considering that a significant portion of XRP's 100 billion token issuance is already held in escrow. There is a rather small market supply available. A large institutional pool's increased demand will inevitably push prices upward. The $500,000 per XRP internal valuation set by the World Bank is not a wild assumption. It's a determined minimum price that takes into account the massive demand required to satisfy Basel IV regulations while preserving global financial stability. The distinctive technological characteristics of XRP are a major factor in its selection for this historic role. XRP employs a consensus mechanism that is significantly more effective than several cryptocurrencies that rely on energy-intensive proof-of-work mining. This enables quick, inexpensive transactions with a small environmental impact. This fits in nicely with the increased focus on sustainability and finance around the world. Moreover, XRP is perfect for cross-border payments because its transaction speeds are measured in seconds, a vital prerequisite for reserve assets that need to preserve flexibility and liquidity in a variety of currency jurisdictions. Furthermore, XRP differs from many other digital assets due to its governance and regulatory structure. The business that created XRP, Ripple, has actively spoken with authorities throughout the globe, encouraging compliance and openness that bolster institutional trust. The World Bank's decision was definitely influenced by this regulatory clarity, because reserve assets need to have clear legal frameworks in order to reduce risk. This development may mark the beginning of a new age of monetary equilibrium from a geopolitical standpoint. For many years, the dollar's supremacy as the global reserve currency has been a pillar of American economic might. But it has also led to tensions and weaknesses, particularly when nations look for ways to get around sanctions or diversify their reserves. The adoption of XRP as a worldwide reserve asset provides a borderless, impartial substitute that may contribute to the democratization of global finance. More stable and equitable economic ties between areas, including emerging economies that have traditionally been left out of the dollar-centric system, could result from this change. Significant repercussions will also be seen across the financial services sector as a result of XRP's institutionalization. It will be necessary for banks, payment processors, custodians, and fintech businesses to create services and infrastructure that facilitate XRP transactions and holdings. As a result of this ecosystem expansion, XRP's liquidity and usefulness will be further strengthened, drawing in even more institutional players and starting a positive adoption and integration cycle. This change is transformative for investors. The price-speculative narrative surrounding XRP gives way to one based on mandated demand and fundamental value. Due to the unchangeable principles of supply and demand as well as practical financial rules, the $500,000 price point becomes more than simply a target, it becomes a need. There has been a paradigm shift in the way cryptocurrencies are valued, with their contribution to global financial stability now taking precedence above market sentiment. This change is not without difficulties, though. It will need technological advancements, cybersecurity precautions, and the standardization of regulatory frameworks across jurisdictions to integrate XRP into central banks' financial systems. Although they are important duties, the scope of Basel IV obligations makes them unavoidable. By offering a directive and a seal of approval that will remove operational and political barriers, the World Bank's support expedites these processes. The wider societal ramifications must also be taken into account. Everything from monetary policy to regular banking experiences will unavoidably be impacted by the incorporation of digital assets like XRP into the core of global finance. Increased financial inclusion, particularly in underserved areas, lower transaction costs, and quicker, less expensive international transfers are all possible outcomes of XRP's growing significance. Blockchain technology's efficiency and transparency provide a way forward for a global financial system that is more open and egalitarian. The decision's ramifications will extend well beyond the financial markets in the future. A new age where technology and finance meet at the highest institutional levels has begun with the World Bank's official endorsement of XRP. More regulatory frameworks that support innovation while maintaining stability are probably going to be inspired by the example set by Basel IV's mission. Building confidence in the digital financial ecosystem requires this delicate balancing act. In conclusion, a significant turning point in history has been reached with the leaked World Bank document verifying XRP's classification as a Tier 1 global reserve asset under the Basel IV protocol. Global central banks are required to keep XRP as a result of this pronouncement, which creates an unprecedented demand floor and pushes the price of the cryptocurrency toward $500,000. XRP is positioned as the cornerstone of the financial system of the future due to its distinct technological features, institutional support, and regulatory certainty. The time has arrived for cryptocurrencies to rise above the hype and establish themselves as the cornerstone of mainstream international banking. One thing becomes evident as we follow this story's development: digital, linked, and regulated money is the way of the future. And at the heart of this financial revolution is XRP. It will be crucial to comprehend XRP's revolutionary role in the Basel IV age, regardless of your level of experience as an investor, financial expert, or just someone who is interested in the future. The World Bank has made its voice heard, the directive is unambiguous, and the moment to pay attention and take action is now. Please keep in mind that I am not a certified financial advisor. These videos only include content that is meant to be entertaining. Before making any financial decisions, I always advise viewers to do their own research and speak with experts. Many thanks for listening. Please remember to hit the subscribe button and give the video a thumbs up if you liked it. To be the first to know when I post new stuff, make sure you have enabled the alerts as well. I can't wait to see you again in the next video. Be careful.